Hi all my brothers wherever you are. This time, let us give you the secrets in technical analysis of the movement of the market trading chart trend using candlesticks. This analysis can be used for various stock trading markets, forex, crypto, binary, options, and others. Here we do not discuss starting from scratch again how to operate a MetaTrader. You can all learn from other channels or learn for yourself in the Trading Guide ebook on our Telegram channel. There are many ebooks, scripts, templates, indicators, and others. Let's just start. To understand the basis of when to buy and sell profitable entries, we are required to first understand the types of market price movements. Basically, the trading market has only three movements. 1. Parallel or sideways equals up and down movement that tends to price there and there, regularly. 2. Uptrend or bullish equals price movement tends to rise, the chart rises to the top. 3. Downtrend or bearish equals price movements that tend to fall. The chart is looming down, and from the three movements we can take profit through the two movements up or down. To be able to read market movements, we must remember that in ancient times all transactions were written, starting at 4 a.m. GMT +7 when the MetaTrader opened the market. What was the price? Then the price rose, the highest or the lowest fell to what price, and ended with the closing price of the market with what is the price. To make it easier, you can use a bar or candle or line chart that already exists in the MetaTrader. Bars and candlesticks are basically the same in that their bodies are listed as open, low, high and close, OLHC. In our MetaTrader there is also a time frame menu to show the unit of time for observing market price movement analysis. Each time frame shows its own time limit and movement pattern. With different time frames, we can see market movement data in more detail and clearly. One way is to look at market price movements through a smaller time frame, even up to the 1x minute time frame. Through Explore Candles or Explore Time Frames we can see the limits of movement more clearly and make it very easy for us to read the market to find the most profit. In the analysis technique is usually called multi-time frame analysis, MTFA. If you have mastered this technique, then we can enter the market where, when, and under any circumstances, of course, by looking at the range of market movements at that time. If the movement is only 2 pips because it is sideways, then it will run out to pay the spread, then don't enter. Look for markets that move at least 5 pips for fast scalping, or be a 1-hour or 4x hour trader or day trader, or if you want to invest you can be a weekly or monthly trader. We can use market price movements every 1 minute, 5 minutes, 15 minutes, to read what is in a larger time frame. For the record, don't trade when you want important fundamental news. Because the market atmosphere at that time was very volatile. Look for busy market times, usually when the markets of each country have started to open. We will slowly share all the secrets of technical trading analysis so that everyone can feel consistent profits and not just lucky capital. Let's give an example of how we read market price movements to generate maximum profit. First we have to remember the process of candlestick occurrence. The 1x hour time frame has 2 by 30 minute candlesticks, 4 by 15 minute candlesticks, 6 by 10 minute candlesticks, 12 by 5 minute candlesticks, and 60 by 1 minute candlesticks. The secret here is that each time frame has its own pattern of market movement. However, the movement of each time frame pattern will always exist in a larger time frame market movement pattern. With us knowing this secret, it is enough for us to block at the highest price for a sell entry, and when the lowest price is reached, we can release it to replace a buy order, and then when the price rises, we release it. Then we can profit all the time. To apply to the current candle, we just have to look at the trend pattern in a time frame that is smaller than the time frame that we use as a trading reference. For example, trading on the H1 time frame, we can see movement patterns in the M30, M15, M5, to M1 time frames. Just look at the peaks and valleys of the H1 trend pattern, which is also the peak or valley of the smaller time frame pattern, and open a position there. If the H1 reference time frame is trending up, we just have to look for the reference position for the lowest movement pattern, which is also the lowest in the H1 pattern and in a smaller time frame for entry buys. On the other hand, if the trend on H1 is down, we just have to look for the reference for the highest movement pattern on the H1 time frame and also in a smaller time frame for sell entries. Take profit as in the H1 movement range as a reference for observations. And stop loss outside the movement range of 4 to 5 pips from the entry position according to the spread of each broker. For a detailed discussion, we will convey in stages along with examples. So, keep on simulating our channel, so you can keep practicing for consistent profits. Thank you so much for watching. Good luck to all of us. Don't forget to follow and support us by liking, commenting, sharing and turning on the bell, so that many more people can make maximum profit from trading.